Hello, let us look at the statement of profit or loss, and this statement basically shows the performance of a business. The performance of a business. And how does it show this performance? It represents the revenue that a business has generated during a certain period. So we are saying that during the period, for example, January 2025 to December 2025, we have generated this revenue, okay? And then it also shows the expenses that that business has incurred in the to be able to generate this revenue, okay? And when you take that revenue that the business has generated during that period, you less the expenses, you're going to see whether the business has made profit or loss, okay? You're going to see whether the business has made a profit or loss, okay? So basically, if the revenue is more than the expense, then that is a profit. But if the expenses are more than the revenue generated, then that is a loss. So basically, the statement of profit or loss is able to show the performance of that business, okay, by being able to see how much is the business making, okay? That is what we're calling the profit, and whether it is losing, also we are able to see whether the business is losing, okay? So let us get to understand how we prepare it. Remember, it is as basic as first getting to list your revenue, and then you list your expenses incurred during the period, okay? So in this example, let us use a practical example to understand. We have the adjusted trial balance. The adjusted trial balance, remember, is the trial balance that has been adjusted to include the period end adjustments. Okay, period end adjustments are like depreciation, allowance for bad debts. Okay, those adjustments that are made at the end of the period. Okay, so here we have our adjusted trial balance as at 31st December 2025 for KM Traders. And these are the the account balances we have. These are the account balances we have. We have cash, physical cash, we have cash in bank, we have accounts receivable, we have inventory, and we have prepaid, insurance, and office equipment. These are basically assets accounts. These are basically assets account, okay? And these usually go in the statement of financial position, okay? The statement of financial position, or what is commonly known as the balance sheet, okay? Remember, in the statement of profit or loss, we are looking at the revenue and expenses, okay? So always when you get the trial balance, you should be able to know what you're looking for, okay? So you can see from here, we have cost of sales, we have salaries expense, rent expense, utilities expense, insurance expense, and depreciation expenses. So this is what, this is a list of the expenses we need to include in the statement of profit or loss, okay? Remember, accumulated depreciation is used to reduce the asset account it relates to. In this case, you're going to see this is going to be used in this preparing the balance sheet, where the net book value of this office equipment is equals, it will be less this 30,000, okay? Then here, when you continue, you're going to see we have accounts payable, we have a bank loan, we have accrued expenses. What are these? These are basically liabilities. These are basically liabilities, and they go to the statement of financial position as well. Remember, the statement of financial position, that is the balance sheet, usually has you list the assets, the liabilities, and equity. And because we've also mentioned equity, remember this here we have capital and retained earnings. This is basically equity, and it will go under equity, okay? So here we have now our sales revenue. Remember, what is going to our statement of profit or loss is the revenue that has been generated during the period, and less the expenses incurred during the period, okay? So let us look at the structure. Okay, first you list the name of the company, of the business, the specific statement. Remember, financial statement as a financial statement has a set of 4 main statements, depending on the business of the company, how large it is. And the 4 main statements is a statement of profit or loss, the balance sheet, that is a statement of financial position, the statement of changes in equity, and you also have the statement of cash flows, okay? So always make sure you indicate this statement that you're preparing is which one. And in our case, we are preparing today the statement of profit or loss, and you make sure you indicate the period you're looking at. Okay, remember, in the statement of profit or loss, we are looking at the revenue you have generated during a certain period and the expenses you've generated during a certain period. The expenses that you have incurred during a certain period. Okay, if you compare it with the statement of financial position, the statement of financial position, commonly known as the balance sheet, you're going to realize we usually are looking at the balances as at a particular point in time. So we are saying for the period, for as at 31st December 2025, when you're looking at the statement of financial position, we usually looking at the balance on a specific date. Okay. Now, for the statement of profit loss, we are looking at the period. Okay. So let us start with the structure. How does the statement of the statement of profit or loss look like? We first start by getting our gross profit, and our gross profit is basically our sales revenue. Our sales revenue. In this case, we can see we have our sales revenue. We've seen we have a balance of 330,000. So we come and include 330,000. Okay. Then we are going to less cost of sales. Cost of sales. What is cost of sales? Cost of sales is the direct cost that relates into what you're selling. Okay. For example, when you go buy goods, the cost of buying those goods is your cost of sale. Okay. And in our case here, we've been given the cost of sale. We've been given the cost of sale balance as 220,000. Okay. So here we are going to less 220,000. In some instances, you will not be given this. Okay. You will have to calculate it by yourself. Okay. Sometimes you are given a scenario where for goods, mostly, you have been given the opening. You've been given the opening inventory. Okay, so these are the goods that were there at the beginning of the period, and then you're given the purchases. So you add the purchases that have happened during the period, and then you're given the closing inventory. So you should less the closing inventory to get the cost of sales. So basically, you're taking the opening inventory. You take the opening inventory at the beginning of the period. You add the purchases that have happened during the period, and then you less the closing inventory at the end of the period. This one should give you the cost of sales. Okay, so in our case here, the period end adjustments, which include also knowing the cost of sales, or rather the cost of goods, has already been done, and we have a balance of we have our cost of sale accumulated during the period as 220,000. Okay, so here we less 220,000, and we will be able to get our gross profit. Our gross profit. The gross profit is basically the revenue that has been collected from the main direct activity, the activity of that business. Okay, so for example, if a business does buying and selling of, they buy television, what they have earned from selling those television is what we are calling here the sales revenue. But if they take this money and go and invest it, this is not sales revenue. Okay, remember here, when you're looking at the gross profit towards the sales revenue, if they invest, we are going to see that revenue is going to be indicated under the investment part. Okay, so in our case here, our gross profit is going to be 110,000. Okay, 110,000. So what next is there? There are two classification of expenses: selling and distribution expenses and administrative expenses, or rather operating expenses. Okay, selling and distributing expenses is that expenses incurred in the direct distribution or causing the sale of that whatever you're selling. Okay, so the direct, after the cost of sales, the other direct costs that are going to be involved to facilitate a sale, that might be delivering this good, it might be advertising, marketing. Okay, so that there is that classification, and then we have the administrative expenses. When we look at the expenses we have in our examples, we have salaries, we have rent, utilities, insurance, and depreciation. These are administrative or rather operative expenses. If here in the salaries expense, we were told there is salaries for sales people. So we are told that salaries for sales staff expense is this, then that one will go under selling and marketing, selling and distribution expense classification, okay? But in the case that they don't, you just list them, these as administrative expenses. And what do? We less administrative expenses. So here we are going to list the administrative expenses. So we have salaries. We've seen we have salaries expense. We have salaries expense. We have rent expense. We have rent expense. We have utilities. We have insurance. We also have depreciation. Remember, depreciation expense, you make sure you include it, the depreciation that you have expensed during that year, you make sure you include it in your P&L, okay? So these are the expenses we have, okay? So what is a total? What is our total? It's administrative or operating, they are the same. What is a total operating or rather administrative expenses? What is the total administrative expense? So we are going to sum the expenses. So we have here, we have our salaries expenses. They were 45,000. So 45,000, we add 18,000, okay? We had 18,000. We have utilities as 7,000. Then we have insurance as 5,000. And our depreciation expense as well is 10,000, okay? So here we are going to have a total administrative expense. It's going to be less of 85,000, okay? So how do we get operating profit? We take the gross profit, we less the operating expenses. So in this case, we are taking 10,000, we less 85,000, where we are going to get 25,000 as our operating profit, okay? If we had tax, here, this is where we include income tax expense, okay? So we are able to get now the profit after tax, okay? In our case, we've not been given any further details on tax, okay? So this is going to be basically our profit for the year. This is going to be our profit for the year. Mostly for sole proprietorship, you're going to find we just close with the profit for the year. We don't include the tax, okay? But if you've been given the tax details, you just include here tax, income tax expense during that period, okay? And you make sure you also less that tax expense, okay? So here our profit for the year is 25,000, okay? So remember how to prepare this statement is basically being able to understand we take the revenue, we less the cost of sales first, we get the gross profit, okay? And then we come and less our expenses during the period, okay? So we are able to come to get our operating profit. So basically, this is how we prepare the statement of profit or loss. And when you're reading one, as someone who is looking to understand it, you are able to see the direct sales revenue that business has collected during a certain period. You are able to see the cost of buying or the cost of having or even manufacturing of manufacturing whatever they are selling, okay? This is where you're going to find it. This is where you're going to measure and see even the basically the margin, okay? The gross profit margin of this business, okay? Then you're able to see the operating effectiveness of that business by their administrative expenses that they have incurred during that period as well, okay? Then you're able to see the profit for the year. So basically, this is how to prepare the statement of profit or loss, okay? See you in the next section where we shall be looking at the statement of cash flow.